live, Chilton. You totally took that. You totally took out the audio.
Totally. Okay, totally.
What is up? Yo, how are you doing? Like outside, like what was going on right there?
Yo, the title got me hyped.
I was gonna say, because you had a nice little song going.
I did, but y'all can't hear it.
No, is it still playing in the back of your head?
It is. It's gonna be playing the whole show.
Oh no.
Just wait till I get in the studio though.
Are we gonna create a remix?
Oh, a chopped and screwed remix.
Oh my God. Here we go. Y'all, it is gonna be a day. But what is up, everybody? This is Mark Monroe, and I am accompanied by the wonderful
Jolene GC in the place to be.
And this is Hot Take Thursday episode where we get to talk about some of the things that are happening around in the news and, you know, what could be potentially brewing in your portfolio or, you know, maybe in the future. Who knows? But either way, we try to give it to you nothing but the real, factual, and on top of that, our goal is to make it fun. So we hope that you have your pen and paper or iPads or tablets with the writing stylus with it, like Jolene does over here. So now she's modeling the pencil. But yeah, we hope that you're ready. And if you haven't subscribed yet, I mean, down below, just hit it. And then we can just be over it. And then on top of that, if you like what you see as it pertains to the information that you're receiving, and on top of that, you just think that we're cool, then go ahead and hit that like button. Don't have to do much. Just, you know, just move your mouse or maybe the remote and just go hit that like. We would really greatly appreciate that. So that way we could bring more cousins into the fold. And on top of that, if you want to be in the know for when we're actually getting ready to post another episode, go ahead and hit that bell so that way you can be a part of the Cool Kids Club. So, Jolene,
yeah.
How art thou?
You know, I'm good.
You look, I said the blingage. It's like, it's shiny. Like
my Lady of Leisure necklace. Yeah.
I see it. I see it. All right, so you ready?
Yep.
All right, let's do it. So talk to us about what's going on in these streets.
Yo, it was blood in the streets, aka a cell, aka red all over the place. So the Dow was down negative 119.68 points. S&P 500 was down 1.736 points, and the NASDAQ was down 100.14 points.
It'd be like that though sometimes.
Say that again.
It'd be like that sometimes. You know what sucked about today for me?
What? Oh, I know, but go ahead.
Oh wow. Okay. Yours truly couldn't buy anything.
Nothing.
I had everything ready to buy, and we were having a few technical difficulties over here at Monroe Manor throughout quite some time. On a day that, you know, there was quite the sale, NASDAQ's down by 200 and some change. I was like, and then the unthinkable happened. I couldn't add any stimulus to the market.
None.
And I had today would have been the day to probably deploy 30% of my portfolio into the market today.
But tomorrow,
Don't say that. And the next thing you know, tomorrow it's just all on the upside. So
I don't know.
I don't know either. What do I know?
Yeah. What do you know? All right. So sector performance, as you know, Mark. Mm-hmm. Mark, did you know? Okay, so what's funny is I played this game with Mark called Did You Know? And I just talk about so many things that I'm super excited about that he already knows. And sometimes I throw in one thing that he may not know. So I always say, did you know? Anyway, Mark, did you know that here at the Come Up series, we track 11 of the sectors and we track the top 3 and the bottom 3?
Yeah.
Oh, okay, just making sure. Okay, and so did you also know that today utilities, consumer discretionary, and real estate were at the top? But check this out. Did you know that health, communication services, and energy were at the bottom? Isn't that crazy? And you know what? Given like today's news, or not even just today's, but like this week's news, like that makes sense that those are tracking that way.
Mm-hmm.
And then, did you know that you can find all of the come-ups, what we call SIPs, aka the pics, on our IG profile at that come-up series? And also, Mark, did you know that Twilio, Datadog, and DocuSign were in the top 3? We know how you feel about DocuSign. We know how you feel about DocuSign. But did you also know that for the bottom 3, we have Synopsys, CWeb, and TAN, aka the solar ETF at the bottom. Yeah.
Mm-hmm.
Sounds like a sale.
There was a lot going on. Like I said, you know, a whole lot going on that I just had to sit back and just play intermittent spectator.
Well, luckily you got everything up and running now though, right?
Yes.
Okay, good.
Yes.
And also we had, so despite the market being red, did you know that we had a total of 3 52-week highs from the pick list?
You already know.
So we have Twilio, FTNT, and JP Morgan. So those are the top 3. Roku's had earnings. I said Roku's. Roku had earnings. What's up with Butter?
I have no idea.
Maybe he likes Roku. I don't know. What's his
I think he was like, yo, he was over here. I know one thing. He was over here busting it for Twilio the other day when they had reported their earnings.
Oh my gosh, I cannot with Butter.
Yeah.
His stock picks.
No.
Maybe one day he'll share what his stock picks are with y'all.
Yo, if only y'all knew what Butter's picks were. Like, for example, like Chewy or something like that. I mean, he fell out of love with like PetSmart and stuff like that. So
I heard about that. I heard about that fallout. Mark, so for Hot Take Thursday, you know, there's definitely some news. I know that there was some questions related to economics, you know, the Fed, all the different chips. So let's oh my gosh, I'm tripping, y'all. I am tripping. Hello, we have Black History.
I was gonna say, wait a minute, hold
up. Okay, you know what it is? I'm thrown off because our chat is down.
No, and it's like, it's just
it's down.
If somebody is at YouTube, can we like talk? Like, YouTube, we need to have a conversation. Like, yo, don't make us bring you inside the house. Like, yo, just get some act right here.
Well, you know what? Even though with all the power outages, Black Power is still in full effect. Okay, shout out.
There it is.
There we go. Boop.
That part.
All right. You see what I did there? All right. So we have The Pen is Mightier Than the Sword. Award-winning novelist Toni Morrison was born on this day, February 18th in 1931. May she rest in power. She actually left us in 2019. So you can find out more about that at biography.com. So Toni Morrison was a Nobel Prize and Pulitzer Prize winning novelist, editor, and professor. Her novels are known for their epic themes, exquisite language, and richly detailed African-American characters who are central to their narratives. Among her best-known novels are The Bluest Eye, Sula, Song of Solomon, Beloved, Jazz, Love, and a Mercy. Morrison earned a plethora of book world accolades and honorary degrees, and also received the Presidential Medal of Freedom in 2012. This is one of her quotes. Actually, there's 2. First one is, freeing yourself was one thing. Claiming ownership of that freed self was another. Yo, this is so pertinent, okay? Freeing yourself was one thing. Claiming ownership of that freed self was another. That's from her book, Beloved. And then from the Song of Solomon, her quote is, you want to fly, you got to give up the stuff. It says something else when I'm going to say stuff, kid friendly, that weighs you down. So if you want to fly, you got to give up the stuff that weighs you down. let no thing stop you. Remember, y'all. So we want to give a happy belated birthday to our brother Huey Percy Newton, PhD, co-founder of the Black Panther Party, who was born on February 17th, 1942. Yo, anytime a Black Panther is on there.
Oh, shout out to my grandfather, Louis St. Cyr, one of the original Black Panthers. So
let me sit up, okay? Yes. All right, so Huey P. Newton and fellow Black Panther co-founder Bobby Seale co-authored the 10-point program to guide the African-American community to liberation. In Dr. Newton's honor, we will share the What We Want Now portion of the Black Panther 10-point program. All right, what we want now. We want freedom. We want power to determine the destiny of our Black community. We want full employment for our people. We want an end to the robbery by the capitalists of our Black and oppressed communities. We want decent housing, fit for shelter of human beings. We want education for our people that exposes the true nature of this decadent American society. We want education that teaches us our true history and our role in the present day society. We want all Black men to be exempt from military service. We want an immediate end to police brutality and murder of Black people. We want freedom for all Black men held in federal, state, county, and city prisons and jails. We want all Black people, when brought to trial, to be tried in court by a jury of their peer group or people from their Black communities as defined by the Constitution of the United States. We want land, bread, housing, education, clothing, justice, and peace. That was from the What We Want Now. Is a portion of the Black Panther 10-point program. So, yo, that's what they were about. And that's what they still about today. I do want to give a shout out though. What was that, Mark?
Shout out. I said that's powerful.
Yeah. When you think about it, yeah. What will you take from those 10 points?
What will I?
Mm-hmm.
Everything. I mean, that's what gives me power to ultimately do this every day and much more. So, all right. You
know, I definitely would say that it all resonates. But the part when he says we want all Black men to be exempt from military service, obviously I would include women in that as well.
Facts, 100%.
Yeah. And yeah, I want it all. Like, I don't want to leave nothing on the table. I want it all. So
tonight we take everything.
It's a high shot side.
We leave them nothing.
Nothing. But there are some tidbits that we could share. So this is a shout out to all of the Alpha Kappa Alphas, AKAs, because Toni Morrison was a sorority member and Huey Newton was a member of Phi Beta Sigma fraternity. So all of you a part of Greek lettered organizations, please light up the chat if it's on. I don't know if it is on, but just do it anyway.
It's that. The chat is that.
Oh my gosh, y'all light it up, okay?
Shout out to the pretty girls of 1908 and shout out to them blue stepping brothers of 1913.
All right, so that was your Black History moment and from us, but you know, continue to have Black History moments 24/7. Okay.
Let's do it.
All right, Mark, let's get into some economics.
All right. So as you guys can see, the title reads, The Chips, the Fed, that Dip Tho. All right. So there's been some questions that have come forth from the cousins. Am I not correct at all?
Yes. You know, these questions.
This is Hot Take Thursday.
It is Hot Take Thursday.
All right. And by the way, before I even get into it, I just had a little quick brain for it. I think that's actually 1914, by the way, for Phi Beta Sigma.
Okay. All right. So let's pull up these questions. Questions were deep, y'all. Deep meaning there was a lot. Okay. And the funny thing is this title is perfect for all these questions because this was the theme of the questions. Many of you all asked the same types of questions. So the first question, excuse me, is how can the bond bubble affect the stock market?
Okay, good question. So when looking at the bond, quote unquote, bubble, so here's how we put it into perspective. A lot of folks have been, and let's roll back the clock a little bit. So what made stocks or equities very much so attractive? One, commodities suck. So nobody was investing into gold. Honestly, there's now this phrase of like gold is trash and Bitcoin is like the new gold, or cryptocurrency is now the new gold. All right, but in the traditional sense, so if you didn't go with stocks, then normally you would go with some type of commodity. And if you didn't go with a commodity, you would go with, say, for example, some type of, treasury, like either the 5-year, 10, or the 5-year, the 10-year, the 20-year, or the 30-year. You could even go shorter so you could trade the bond market. But unfortunately, there was nothing really there because we were going to zero interest rates. Then we also had, say, for example, the rates that you would get from your bank. So a lot of folks would turn to cash when they had somewhat of a savings, some interest rate to their savings account. Okay, so let's roll up the clock a little bit. Well, savings accounts are trash. I mean, you don't really get any type of interest rate. I mean, they give you like a penny, if that, for interest for leaving your money in there for X amount of time. And then at the top of that, when we talked about interest rates, I mean, let's be real, there was really nothing there either, in the sense of zero interest rates, zero. You see where I'm going with this. Mm-hmm. So I was going to say something shady, but I was going to leave it at, I'm going to be on my best behavior for the first 5 minutes. But don't worry.
It's done.
we queuing up. We queuing up over here. Okay. All right. So then there was nothing there. So as long as there was nothing else available, then equities really became significantly attractive. Like putting your money in, when we mean by equities, stocks. So everybody was buying stocks because where else could you get the return? Where else could you get the yield? It was all in stocks. And then on top of that, you can buy and hold stocks. And then essentially you can catch a dividend return on some of them. And then you also had a lot of companies that were performing like they were high growth stocks, though that they were, anything but everybody just joined in on that rally. All right. So there's that. So now that we've gone through 2020 and 2020 is over, the parents are coming home. And so we're starting to see interest rates slightly climb. We saw like a small little smidget of interest rates starting to climb. So when you look at the 10-year is the best treasury to look at because it measures like credit card, home loan, and all those other types of consumer related interest rates when it comes to borrowing. So we started to see a little bit of an uptick there, but then now it's like significantly just like dropped back to a little bit where it used to be. Do I believe that we could see interest rates go up a little bit more? Possibly. But in the grand scheme of things, is the Fed going to consistently hold things to zero? Well, we've been told that they're going to hold it at least till the end of 2021 / first half of 2022. So I don't see that narrative changing, though that some folks are saying that the economy is getting better. But then, they're looking at some of the prehistoric things, and which I'll get into in a little bit for y'all. But I mean, pretty much long story short, blip in the screen. And then on top of that, you sometimes see treasuries increase or the bond market kind of go for an increase when we get closer towards quadruple witching. Hence, which draws me to one of the most biggest mysteries since the day that we released the new list. Okay. TBT.
Yes, talk on it.
And so TBT stands for the 20-year treasury. So it's pretty much, ultra short, and you can play that. And what you can do is, in the sense of defense, when we start to see that stocks go into correction, sometimes you see investors turn to the bond market as a place for safe haven. So one of the things that you can go back and look at, and you know what, let's see if we can get some charts running over here.
Ooh, charts on a Thursday?
I could revert back and not do it, but
no, we need some charts. Why am I so heavy-handed? I'd be slamming this down.
It's like, whoa, okay, say it with some deference over there. All right, so when we look at, say, for example, the 20-year treasury, I'm going to run this as a comparison with, let's say, one of the biggest dogs on the market, which is, you guessed it, Apple. Now notice there's kind of like an inversion here. So for example, when we see treasuries spike up, then we see that equities kind of go for a downward trend. Oh, yeah. Yeah, what's going on here? Let's fix that. Can you see it now?
Yes.
Okay, good. So typically when we see that treasuries go for their spike, you see that equities go for a downward trend. And then essentially as those go down, then we see equities go back up. And clearly we started seeing a little bit of them trading sideways, but all in all, they were on a downtrend, and then equities kind of like followed suit, but now we're seeing this inversion. And so as we get closer, and this is just 1 month, by the way. So if I show it to you, let's say on a 3 month, as you can see, they kind of invert each other, kind of like something else that we know. Should I put that up there as well?
Yeah.
Let's put up our friend, if they allow us.
What was that today?
Now, the VIX, we're going to get past this little, trigger here. All right. So the VIX, on the other hand, kind of like just trades on its own. So let's look at it over a 2-year span. And so if we're looking at TBT, I mean, it's kind of like it always just been sitting there, kind of like just stagnant. Now, of course, you had this VIX, which was ultimately clearly doing its thing for volatility for 2020. But then at the same token, we saw that, for example, when you see the VIX spikes, then so too does treasuries, and then it comes down, and pretty much they kind of trade identical to each other. And then at the same token, you can see the same thing for, let's remove the VIX out of the picture. So if we look at, this is Apple, and then this is pretty much treasuries. So treasuries have been pooped for quite some time. Now, if we look at, say, for example, where we were at this point of inversion where like the blue represents TBT, the 20-year treasury, and it's been trading pretty much the opposite way. Now it's hit some form of a bottom, and now it's starting to make somewhat of an incline uprise. But, in the grand scheme of things, for folks to say that, okay, hey, that the treasuries or the bonds are ultimately going to cause a crash, I don't see it. And then one of the biggest things that sits over everybody's mind is inflation, but we'll get into that in a little bit. But one of the cool things about when we look at inflation, for those that don't know, it's pretty much when prices ultimately go higher, and deflation is when prices go lower. And we're talking about like the cost of goods and those types of things. So you increase inflation across the board. And one of the things that we saw that kind of like drove up inflation over the past, I think, few years was that essentially when we started doing all those cuts, we started to see the prices of things go up, because when you do so many deep cuts within taxes, it drives up inflation. I mean, of course, when you put more money into the people's hands, then essentially from there, now it's like, okay, hey, the economy and the market realizes that, hey, people got more money to spend, so then we can increase price. Well, now people don't have as much money to spend. So when they don't have as much money to spend, then pretty much what do you think happens to those cost of goods? They go down, they deflate. Not too heavy, but it just shows you within a recession, those things typically happen for a short period of time. And then you start to see some inflation, which ultimately drives up the price, letting you know that you're on some type of economic return. The Fed wants to get the inflation rate to, I think it's 2%. We're nowhere near close to that. And on top of that, we're kind of like at the point of listening to Janet Yellen, former Fed chair, and Jay Powell, by them saying that, hey, we've got the tools to ultimately kind of measure it. And one of the things that I wouldn't be surprised in which that they do, watch taxes, because given that you have all this stimulus and everything else, as well as a $2.3 trillion deficit that was created, I wouldn't be surprised that they start like slowly going through this process of possibly increasing taxes somewhere down the line, just, over a period of time exponentially, not too fast, but also not too slow, just to be able to carve and chip away at some of that deficit that we've created.
Okay. Next question. Let me see. We have several questions. Keeping in the realm of the Fed, this is a very general question.
Mm-hmm.
Basically, they want to know the Fed meeting and the outcomes of it. Were there any highlights from the Fed meeting? Because really, that's a question that they could research, honestly. But if you want to share a highlight.
Yeah, so, I mean, honestly, there weren't really any significant highlights. I I didn't see any significant highlights from the Fed meeting. I think that they're pretty much keeping everything the same. I mean, they are understanding that unemployment is a huge factor, and they realize that the government definitely needs to get the stimulus package out to the American people, because of the fact that if not, then essentially that can send us even further into somewhat of a tailspin. And you have to think about it. A lot of times they focus on GDP, along with a few other things. And so the economy needs to start to run. And one of the challenges that I want everybody to go back in time to think about is where they started stripping some of the tools that the Fed had underneath its belt to kind of like protect the economy. That's going to be interesting to pay attention to as we go over the next at least quarter or 6 months of what does US Congress do will they restore some of those powers back to the Fed? So that way they have more tools at their disposal to, say, for example, weather the storm and to also help steer the economy. One of the biggest things was that they had a huge cash balance. And so now it's just like, okay, hey, well, where does that leave us now?
What has been the trend with that, giving the powers to the Fed? Like, what has been the trend like with Democrats versus Republicans? Like, are we more likely to see those powers increased or decreased with this Biden administration?
I think that you will. I think that you significantly will, because of the fact that, yes, the Democrats do control Congress, the Senate, the House, and the White House. But at the same token, I think that one of the things that there's this narrative moving where Joe Biden and his presidency is trying to show that he can work well with others. Mm-hmm. And I think that, this is like one of those ones where it's just like, okay, hey, well, do you want to show that you're playing nice with everybody else? Or would you rather, say, for example, focus on what's the task at hand, which is the American people, and they need these things. So some folks are kind of like trying to push pressure for him to actually put things into executive order, whereas he's actually trying to run it through Congress and let them ultimately decide. So it should be very, very interesting. But all in all, here's my projection. Stimulus is definitely going to come through. And I think that they may even increase stimulus. They probably may bring out another stimulus package later on down the road. And then from there, I think that will probably be the final. I think that would be the final stimulus package that hits the American people. And then after that, I think that you will start to see some inflationary pieces come to light. But yet at the same token, I think that if you give power to the Fed, then they can weather that storm.
Okay. All right. Speaking of Biden, question here about Biden helping the chip companies.
I mean, I think that's huge. I mean, you have a lot of auto manufacturers. You have a lot of electronics companies that are sitting there kind of stagnant because of the fact that they don't have the materials. And so that's kind of like choking the life. I think that's kind of like choking the life out of, say, for example, what is it that's happening across multiple industries because they need it? It's not just in the sense of innovation's sake. It's just like, there are folks out there. It's not to say that everybody needs a car, but I mean, the fact that you've slowed down, now the auto industry has slowed down. You're talking about health, that like health innovations are being slowed down because a lot of those chips are being supplied for a lot of that research. And I know that what this government wants to start putting that energy back into. When we talk about climate change and, those types of modeling of data, then you need processing power in order to do that. So I think that there's a lot there. And I think that honestly, it's like, that's a smart move. I think the biggest thing is he's going to have to come to the negotiation table with China. And that's going to be an interesting take to see exactly how that plays out. But I think all in all, I think that we'll get back into the swing of things. I think that looking at a lot of the reports that I saw in guidance for some of the chip makers, and this is where I'm actually telling everybody to pay attention to NVIDIA's earnings because it could be very, very telling. So I would say, pay attention to not just the earnings, but the guidance and what they forecast because they're in the heat of it. But from what I'm gathering, I don't think that a lot of these chip makers are being slowed down. I think it's just a matter of like the inflow of having excess inventory. I don't think that that's going to happen at least for another 2 quarters.
Okay. Getting back to economics, there was someone you wanted to shout it out for a resource.
Yes, I wanted to give a shout out to our brother Q, Quentin. I wanted to thank you because you produce a wonderful resource that you shared with the group, and I wanted to share that with the people. So shout outs to Q, aka Mr. Wall Street. he came up with a resource called Trading Economics. And so, of course, I've known about this site before, but yet at the same token, I wanted to give him the credit because of the fact that he brought it to light, especially when we started going through an exercise of looking at fundamentals and how does that, like, how do fundamentals coincide with, say, for example, economics? Could be a part 3 there. But here is a site in which that you can look at the main indicators, and then you can start doing a breakdown over, say, for example, multiple different sectors or sections. But the main ones that everybody looks at is GDP growth rate, interest rates, inflation rates, unemployment, government debt to GDP, balance of trade, current account to GDP, and credit rating. So, of course, credit rating, I mean, just like individuals, countries have those as well, as it pertains to, like, how much debt, and then essentially their ability to be able to pay off that debt, and then essentially, hey, are you good for it or are you not? When we look at GDP growth rate, we went through this period of time where we talked about GDP, where it's the incoming, outcoming, and then essentially the in between. So essentially, what goes in, what comes in, what goes out, and the cost to make or the cost to produce. So that's GDP, and then from there we look at the growth rate. The good thing about this is you can look at it across the board, and then come all the way over here to the U.S. And so the last reading that we just had was at 4. So I mean, there you have it. And so the cool thing is you can go even further to look at from transport services and all across the board, from construction, agriculture. You can do all that as well. And it gives you a solid breakdown of how is it that we got there over the past few quarters. And on top of that, it tells you when it was last reported, which was on December 20th. Now, the cool thing about it also is you can also get, say, for example, dates. You could break it down by, say, for example, country. So if we want to look at the United States, and then say close. Wait. Yes. Save. So now when we're looking at this, pretty much here are all the things in which that we see. So for example, as of today, this is what we received from all the different reportings. But then also at the same token, we're expected to see some more of this stuff come out. And this stuff is just coming out on a consistent basis. So if you really want to be in the know, there's more than just the main Fed. It's the Chicago Fed, the Dallas Fed, as well as there's also the Atlanta Fed. And so you can get a lot of great data here. And I think that if you want to, it would greatly be impactful, because the more that you see about what's happening across the board, the greater it is for you to look at, say, for example, how does it impact, say, for example, those companies and sectors. So, for example, if we look at interest rates, which is something that everybody's been really paying attention to. Of course, it's kind of like a scary part where we see the United States is at 0.25. So if you notice, they've held it to 0.25 for quite some time now. If you want to look at, say, for example, what's happening over there in Asia, to put it into perspective, China's is at 3.85. So, yeah.
That's a pretty handy tool. Shout out to Q. Thanks, Q.
Yeah. It's very interesting because you can see like other folks are at, like, Austria's at 0, Belgium's at 0, Finland, France, they're all at 0. Another place that you can look at, and just for basic information, like if you want to like just get some of the stuff, is also going to the Census Bureau and just looking at economic indicators. And so these are the ones in which you can get the reports and know when they were released. So what was recently released today was the new residential construction. And so to put it into perspective, we were down by 6%, versus in December, we were up 8.2%. Another thing to look at is, let's see here, what else? We had, yesterday we had manufacturing. So that's kind of like, nothing really has significantly changed. But monthly sales for retail and food services, well, look at this. We were down by 1%. And then this month we came in at positive plus 5.3%. So that's a huge bump. So of course, we'll get another reading that week of quadruple witching, as well as monthly wholesale trade, international trade of goods and services. What else is actually matters here? I mean, they all matter, but I mean, what are some of the things that the stock market pays attention to? You can look at retail inventories, which I don't know if that's going to be that huge given the essential of COVID. So I think that that's still going to be there. international trade in goods. I think that this would be something for everybody to pay attention to. But yeah. And then, of course, new home sales. So we were down 12.6% in November and then up 1.6%. So we should be getting a new reading on February 24th. And that's the U.S. Census Bureau for, say, for example, what are some of the things to be on the lookout for coming very, very soon.
Nice. All right. I put that in the chat for folks. Okay. So up next.
Should I explain quadruple witching for everybody?
You know what? You should, because it's right around the corner.
No, it's like we go through this.
I know, every time, right?
I know. Okay, so for everybody that wants to know, and so quadruple witching refers to a date in which that stocks, so the stock index futures, stock index options, stock options, and on top of that, you know, let's just go to Investopedia so that way I can take everybody through it. So that way you can actually, I'll even drop in the link into the chat so that way everybody can follow along. So there you have it. So pretty much it's where stock index futures, index options. So stock futures and stock index options, stock options, and single stock futures expire all on the same day. So March 19th will be the quadruple witching day. And at the same token, and a lot of folks kind of like say it's like they add all this silly fanfare to say quadruple witching week. Another cool thing about sometimes you see in quadruple witching week is that Monday of that same week of, you know, because quadruple witching ends on a Friday. But you naturally see also like the CBOE, which is known for futures market, also options, new options contracts, as well as, you guessed it, the volatility index. Essentially, they also sometimes give out new dates for new options expirations. So that would be something to watch. And on that day, you typically see a little bit more volatility and more volume at the same time because people are exchanging from at the very last minute, they're waiting that long. They're exchanging from, say, for example, if your option expires on March 19th, then that's the very last day that you can be in that option before it expires, and it's no good. Or it executes in some cases if you have the capital, but if you don't, it'll just expire. So naturally what you'll see is a lot of volume on that day or that week or weeks leading up to it, hint, this week. You see some volatility hang up this week and going into that week of quadruple witching. And what you see there is people are reshaping their portfolios. So you see a lot of institutional money rebalancing their portfolios. How do we know this? Remember back in the time, and there's probably some images that are out there where people were once looking at XLY, where they saw that Tesla had an 18% weighting in the XLY ETF, or 19%. Mm-hmm. Then now I think it's currently sitting at 17 or 17.5%. So don't be surprised when a lot of these institutional funds do some shaving and rebalancing of the portfolio. They just have to do that. Because if not, if the stock ran up so high, then it ultimately throws off the entire weighting of the ETF. So they're going to reshape and rebalance the portfolio. And, you know, ARK, they do it all the time. The only difference is that they do it more actively. And they're also not an index fund. They're just more so a thematic, known as thematic, where they trade on a theme. So they normally do that on a consistent basis. Whereas, say, for example, companies like State Street for the XLK, XLY, they're doing that pretty much around this time as well, leading up to quadruple witching. But then after that, you see retail investors tend to follow what institutional money does. So I wouldn't be surprised as we get closer, you'll start to see some of that volume come through pretty much on the week of. But by that time, institutional money has already done what they needed to do. And I wouldn't be surprised if they just come back in and they're probably already buying. They've already bought the other contracts. If not, they're buying them now for further out extension periods or different dates in time. So that's pretty much what quadruple witching is. So just remember this: 4 different sectors, 4 different indexes or like types of asset classes will expire on that Friday. And then on top of that, sometimes you see new contracts come out. So new dates of contracts come out. And then on top of that, you see a lot of reshaping or rebalancing within portfolios take place the weeks leading up to it, which can kind of sometimes feel like a correction or a very, very strong pullback because of the fact that you're seeing significant absorbent amounts of capital that are ultimately moving through the markets, and ultimately it's making investors spooked. So if you know that, and you know that we get around this time period of the year, that's the reason why they say that February or late February starts to be sometimes a little bit of a garbage period. They has a garbage period of the month because of the fact that there's folks that are rebalancing their portfolios after they've had great runs, and they're rebalancing their portfolios so that way they can prepare for something else, either make a pivot, or they may be possibly looking to step right back in. And mostly around that time, the stocks have probably gone through some type of correction or miniature correction, which opens up an opportunity for them to step right back in and buy it at a cheaper price. So,
well, okay. So some of the cousins were asking about that. So you just said that the institutional folks will step out of the market, meaning sell everything, and then come back in at a lower price. Now, over here, we talk about the holding for long term. So even if you have, long term and say like you're up, not that you can predict the market, but I mean, I've had cousins asking like, should I just get out of this and take my gains and then reposition and rebalance my portfolio when you know that, quad witching and the volatility will impact these dips?
That's not an exact science. It's not really an exact science. I think the biggest thing there is if you have strong gains and if you've been in the position for X amount of time, and that's where it's like knowing your entries and your exits. If you're a trader, if you're a long-term investor, then honestly, I mean, shout out to all the folks in whom which that have been long-term holders of stock for long periods of time. Shout out to you, because honestly, you don't even care. It's more so the folks in whom which that are really doing either short-term trading or mid to, slightly long-term trading where they really care. If you're in a year or 2 year long position, this is all part of the process, and hence the reason why if you're following in the strike price formula, you really kind of like price in 10% corrections as well as shaving off, say, for example, some of that performance. So that way you're not over promising yourself. And so honestly, you just sit back and just enjoy the show. Now, if you're in leverage plays, yeah, that can sting a little bit, but that's a part of the process of you going on a bullish target. But yet, even then, when we see corrections take place, I mean, especially in today's market, corrections haven't really lasted that long. I mean, we're talking about like once upon a time, corrections used to last anywhere from 30 days to 60 days out. Now they're lasting anywhere from 14 days to roughly 25, maybe even 30 days. So maybe a month. So if you're in a position for a year and you're going to have a garbage month here and there, that's okay. As long as the main thesis itself isn't broken, which is essentially, okay, hey, that this is the trajectory, this is the target, this is also what I believe that the company will be able to do and accomplish this year or over a span of years, and this is the reason why investors are going to be interested, then honestly, you're not going to really care.
Now, how does that thinking apply to scale plays?
Scale plays, you significantly don't really care. You don't really care because the reason why is because you've reached a certain point, and if you're still doing scale, you're probably in a year to 2 year long position anyway. So at that point in time, you just kind of expect these things to happen. The average correction comes to, a portfolio. I think it comes every 12 to 18 months, depending on the type of market. And in sometimes recessionary periods, you could possibly see corrections happen maybe even twice a year. So this would probably be, and spoiler alert, because I've heard that I've been known to do this, I'll make a prediction. So here's a bold prediction.
When you look at the timestamp, okay, go ahead.
Okay, so my bold prediction is the fact that I believe that essentially this pullback that we're going to see, it could show a little bit of legs in the sense of maybe 3% overall, maybe 4%. But then outside of that, I think that the market's just going to go back to business as usual. And honestly, I think that one of the biggest catalysts to that is the fact that the stimulus, and by that time, you should see stimulus money coming into the pockets of people. And some folks will be using their stimulus to invest, or quite a bit of folks will use their stimulus money to invest. And then essentially other folks in whom which that really significantly needed will do their part by ultimately stimulating the economy by buying the necessary things in which that they need. So it's kind of like a, two-edged sword.
Okay, so a lot of the questions were asking about NVIDIA's new chip for mining digital currency.
It's about, well, I mean, here's the thing. If you have an NVIDIA GPU, then you can already mine certain types of cryptocurrencies. It's just a matter of, can you mine them better than AMD? And that's probably a no. And I think that where NVIDIA is starting to catch on is the fact that, hey, AMD is selling out of these graphics cards like hotcakes, and they sell out more. They're selling more graphics cards, and they're selling out of those because of the fact that there's also the gamers market. And then on top of that, there's the cryptocurrency market. And it's like you use NVIDIA graphics cards as like the secondary go-to if there's no way that you can get any AMD graphics cards. So it's kind of like this has been like the case since 2016 or 2017 for cryptocurrency mining. Everybody knows that AMD's graphics cards and this architecture has always been known for its computational, and it focuses better on an AMD chip. So I'm glad that NVIDIA is getting into the party. I think that they see that there's opportunity there, especially when they're starting to see that certain cryptocurrencies, Ethereum, are also starting to take some shape, form, and fashion. And they're looking towards other coins or other altcoins to go that path. I mean, golf clap.
Oh, the golf clap. Okay. Here's a question. Do you believe the market pays attention to Cathie Wood ARK investment management info?
Yes, they do. And when you're good at something and then ultimately you've disrupted an entire sector, or you become disruptive, and when I mean disruptive, I mean in a good way, then ultimately, yeah. Cathie Woods and ARK Invest put everybody on notice. And it's like they weren't even really trying. They were just saying, like, pretty much the thesis behind ARK is just like, okay, hey, can we provide great companies and also disruptive companies in which that should be available to everybody. So they should be able to be accessible to everybody to have access within their portfolio, whether you have an exorbitant amount of capital or you don't. And so I think that that's dope in which that they're doing. And then on top of that, they've kind of like led the arena when it comes to thematic investing. There are some other thematic investment ETFs out there, but none of them even come close to what ARK does. I mean, when you invest in an ARK ETF, what you're investing is you're saying, okay, hey, I believe in this thesis in which that they are banking on the future, versus everybody else who has, the typical ETFs out there. They're banking on the fact that these companies will just continue to remain great, and that essentially that, they'll keep doing their thing. The problem with that thesis, though, is the fact that you have like let's take a GE, a company that was once widely respected and once, essentially everybody glorified the company. Where are they now? Okay. And then there's another company called IBM. Where are they now? Okay. And the words of one of my favorite Black actors from a great Black TV show, see if you know it. Bye-bye.
Shout out to Living Single. All right. So up next, we have a question about, it just says Robinhood exclamation point. So I'm assuming it's about, what happened with GameStop and Wall Street bets and all that. But I'm going to combine that question with another question.
I wish I had like two shades to put on.
Another question is more in that vein of regulation. There was some concern from one of the cousins about whether or not, kind of this organized market movement, so to speak. If the cousins are, organized and they're doing their rolling fours, do you foresee any regulation or any shutdown of anything? That was a concern by one of the cousins.
Shutdown of Robinhood?
No, not shutdown of Robinhood, but like coming, like, how they shut down certain activity of Wall Street bets. So they're wondering, like, if the cousins move as a unit, will there be any potential heat?
No, we're not telling out there, like, we're not out here telling everybody to do diamond hands or diamond fist or anything like that. We're not telling people to hold the line or something like that, or telling them to, like, stick it to the man and all that other jazz, and calling everybody retards and stuff like that in, the chats or anything like that. No, you guys are all a team of scholars. Each and every single one of you guys are the culture, and you guys are the future. So honestly, it's like, there's many different organizations or groups or whatever it is in which that they study the market. And there's nothing wrong with studying the market. They're not trying to literally cause any type of market manipulation. Not saying that Wall Street Bets does that. I'm just saying that essentially that each and every single one of you cousins are scholars. You're studying the markets. You're literally looking at fundamental data. You're literally looking at technical analysis. You're studying quants. You're studying so much different parts of the market, and not even just the publicly traded markets. You're studying sectors outside and looking at the economic factors globally. So, literally, we're equipping each and every single one of you so that way you become dope investors that become legendary. So no, there is no stopping you. I mean, we've picked up enough energy and everything else that it's kind of like the rock is rolling down the hill, and ultimately it's adding more as we go down the hill. And honestly, have you ever seen somebody successfully stop a boulder from falling down a rock or stopping an avalanche? I don't think so. So, yeah.
I'm glad you addressed that because, there were, I've seen that question along those lines in various, configurations.
Can I say something though about that hearing?
Yeah.
I just have one question for this gentleman that represented the Wall Street Bets subreddit group. He said that he studied the fundamentals of GameStop and he felt that it was undervalued. Please explain to me how. I really, you know what? I'm going to leave that alone.
Yeah, it's Hot Take Thursday. And even that's too much.
That's just that, I'm going to treat that like an unaddressed envelope.
One that's not going anywhere. All right. So in 60 seconds or less, Tesla versus Lucid. Go.
Tesla.
But why?
Seriously?
I'm giving you this is what the people want to know. They said Tesla versus Lucid. This is what they did. This was the most.
Y'all making me dip into the black now. All right. So hold on. I'm sorry. I'm gonna have to go above my 60 seconds because I think I'm gonna have to give this a nice little, effect for the people so that way we all get on the same page here. So with that being said, I'm gonna see if I can get that going there just so that way I can set the mood for me getting ready to throw the significant shade that's coming. Because they really asked that?
Yes. I've been trying not to discriminate on the questions, but hey.
Okay. I'll just say this. Lucid Motors is a pretty good company. They have some pretty good engineering that hasn't been proven. They have some pretty good numbers from Laguna Beach Raceway. Okay, who cares? Because not everybody's going to be at the raceway. And then on top of that, it's like, all right, well, you have this vehicle which one does it compete against? You competed against the Model S, and then it's at the same token. Notice this, even in his message, I got to take the shades off here so that way you can see me. Then on top of that, you said that essentially that you're not competing against Tesla, but yet you didn't talk about Mercedes-Benz's numbers at the same speedway. You talked about Tesla's Model S. And on top of that, you talked about an older version of the Model S. We didn't even talk about, say, for example, the Model S Plaid. And then all of a sudden, when the Model S Plaid came out, now all of a sudden you want to go run and hide and, we can't find you. And then on top of that, you talking about that you're competing against Mercedes? I'm sorry, how? Well, now don't get me wrong. It's like Mercedes is like half-stepping a little bit, so I can understand that. But how? How, Sway? How are you going to compete against a Tesla? I'm not even talking about the performance. I mean, I'll let the people decide on that one because that's a subjective point as it pertains to the look and feel of the vehicle, because some folks may like Lucid. But when we talk about autonomous full self-driving, okay, haven't really heard anything from Lucid. When we talk about, say, for example, the vehicles sales, haven't really heard anything there from Lucid. When we talk about, say, for example, and Lucid's been around for a minute now, y'all. Don't be trying to act like Lucid just came to the scene all of a sudden, just last year or something like that. No, Lucid has been around for a minute. Mm-hmm. So I guess I'll believe it when I see it. And it's like, it's kind of hard for you to sit there and put Lucid and Tesla in the same conversation. And everybody and their mama wants to have this conversation. Like, is this company the next Tesla killer or something like that? You know what? I say it like this. Prove it first. Prove it. Real game recognizes game. So honestly, it's like, yo, prove it. Instead of doing all these little sound bites and trying to do all these like controlled environments, yo, prove it out there in the streets. The way that it's always been done, the way that it's always been handled. Yo, all you have to do is just bark and tell Tesla to come outside. Now, the problem is if Tesla doesn't think that you're worthy enough, then honestly, they're going to stay inside and look. I'm going to leave that there.
Oh, Lord. Okay. Yeah. Man, people are like going in like, which cousin asked that? Y'all, the cousin just want to set up some shade, I guess. Okay, calm down.
That was a lot, but honestly, it's like, yo, it's like, remember this: elephants don't swat at flies. So again, if you prove that you are another elephant in the room, then maybe we got some action here. But for the most part, it's like, yo, I get tired of us like going through all these different things where we hear about like, okay, hey, well, this company is doing this or this company is doing that. And, okay, that's what they're doing. But what has been proven? That's where we're in. It's like, you have to take this into consideration. Tesla's been in the gym. They've already won a few championships. They're on a championship parade right now. Let these folks like literally let them be on their float. It's a new season. I get it. But let them take their victory lap. Because honestly, they changed the game. How? If they didn't change the game, then why is it that every single auto manufacturer is trying to become an electric vehicle maker all of a sudden?
I mean,
if they didn't change the game, then why is it that every single auto manufacturer is trying to get into the full self-driving game? If they didn't change the game, then why is it that, I'm gonna leave that alone.
Well, it's 5:57, 3 minutes. So I do want to shout out some things. Well, shout out one thing in particular. I want to shout out all of you who have recently became a temporary member of the One Contract Gang.
Yay.
So many of you that took advantage of that Dip Tho and got in and got your contract. So if that is you, I want you to light yourself up in the comments. Show your face. Because that's amazing.
Congratulations to each and every single one of you today for executing.
Mm-hmm.
If it wasn't me, then it had to be y'all. And I am so happy that it is y'all. Though as much as I'm frustrated that I couldn't put, these dollars to work. I am so glad that these employees, man, they had a little day off today, but tomorrow. All right. So, but each and every single one of you, I'm proud because if it's not me, then it needs to be each and every single one of you. All jokes aside, the goal is that, I expect that each and every single one of you become better than me. I have all the faith in each and every single one of you to become phenomenal investors, legendary traders, as well as just generational wealth makers. So let's keep going. And honestly, shout outs to each and every single one of you. I'm proud.
Yeah. I'm excited for you all. And then also shout out to those of you who took advantage of that Dip Tho and graduated from the One Contract Gang.
You were just like piling it on.
I am hammering it home. So shout out to all y'all who graduated. Congratulations. That's awesome. If you got double digits, if you got triple digits, if you got whatever you got, if you graduated to a goal that you had set and now you have smashed that goal, congratulations to you. Light yourself up in the comments. We love to celebrate here at the Come Up series.
Shout out to each and every single one of you.
Yeah. And then also I do want to just share, somewhat of an update. Not too big of an update, but somewhat of an update about our school curriculum project. Yeah, so it's been going great. The youth are super excited about learning they've been learning about money. like what it is. They've been learning about assets. They've been learning about credit. They've been learning about debt, all these different things that are really foundational. And they are ready to go. Mark had them do a homework assignment where they had to take a survey of what was in their room.
Well, can we do that to each and every single one of the cousins?
Yeah, they should. Go ahead, give that assignment.
Huh?
You should give that assignment.
Well, no, you give your update and I'll give the assignment.
Okay. And shout out to Brian Clyette, our cousin who is like the historian. He's the one who provides all of the Black History Month facts. And he's just in his history bag all day.
Yes.
Like that brother is brilliant. You can ask him about something, I bet you he knows the answer to it. So shout out to you, Brian. Appreciate you. Brian is the lead on this curriculum project. Yep. And he has been teaching alongside Chauncey Beatty, the youth. And so pretty soon they're going to transition into the come up. And so we'll be in the classroom with them. It's Zoom, y'all. It's virtual. So don't try to pull up or anything. I had people asking, hey, can I get a ride? When you guys come to South Carolina, can I get a ride down? I swear somebody asked me that. And I was like, oh, no, this is virtual. This is virtual. We still in COVID times, y'all. So they are super excited. And we told them that you all are like a freaking army and that you are investing as well and that you are rooting for their success. So they are all very, very excited. So, yeah.
So I just definitely want to say something. If you're looking at, like, for those in whom that are asking, like, well, how do we play TBT? Well, I mean, if the market's up and essentially you're seeing that there could be any potential downside risk, especially during correction time period, you could play, say, for example, a call on TBT for interest rates to rise. So you can do that. Or if interest rates have gotten a little too hot, then essentially you could play a put against the TBT as well. I mean, there's other things in which that you can do, or you can just run puts against your own positions and hedge against yourself. But there's that. One of the assignments that I'm going to leave with everybody tonight, and if you want to, you can shout us out on Instagram or Twitter, tag us if you like to, tag the Come Up series or myself or Jolyn, or any of the other Come Up squad. What we want you to do is, I want you to go through your home and look around and see exactly if you can do a measure up. Like, I want you to, like, if you want to, just select a specific room and then just literally just do an assignment in which that you have to literally tally up by adding up what the value of everything is in which that you bought. And then on the other side, ask yourself, okay, hey, like, do an add up of how much of those things that you bought, how much revenue did they generate for you? That's your homework assignment.
Oh, Mark, before we forget, how could we forget? What is up with the shirt riddle? Give the people the answer, because so many people guess.
So many people didn't get it right.
Right.
So the first answer, which is on the shirt, is the actual racial wealth gap. So if you look at my shirt, that's the racial wealth gap. If you look on Jolyn's shirt, which is her sipping water or someone sipping water, you never know, that is the gender pay gap.
So shout out to those of y'all who got it. Yeah.
Yes. And we definitely want to send a special shout out to the folks of Texas. I mean, especially, we know that you guys are definitely putting in the energy, and I know that things don't look as, bright as they should be right now, but I just want each and every single one of you to know that we here at the Come Up, and I'm probably sure that the cousins around you, we're here for you. So we definitely, want to know that you guys are okay. And also, if, hey, what can we do?
Yeah. Okay. That pretty much, let me make sure I got all my, yep.
That's it?
Yep, that was all my notes. Everything is crossed off the list.
Okay, well, it's funny because as soon as I leave this, I'm actually going to have a come up session with my wife to kind of take her through alongside with her family and the kids, kind of like a small little recap of what is that they're learning. So
that's nice. I have something like that on Saturday, actually, with my college friends.
Hey,
Shout out to the UGs in the building. We are going to, what is Butter doing?
Butter is lit today, Butter.
Normally he's asleep and having a bad dream.
Okay, so he did his lick, so he's good. So for anybody that just wants to know.
He's chilling.
You good, Butter? Okay.
He's probably upset, like, dang, Jolene has not seen me in a long time. But on Saturday, yeah, I'm going to be going through the starter pack with my college friends. So that's exciting, you know?
I'm excited.
I'm excited. Different groups, you know?
I'm also hosting I think I'm doing a session or a YouTube or a conference or some type of event on Saturday.
On this Saturday?
I think it's February 20th that I'm supposed to be doing it.
Yes. What time was it at? Do you remember?
I think it's 1 p.m. Eastern time.
I just wrote it down somewhere. Hold on. If you go on Twitter, I know I tweeted it. I know for sure I tweeted it on Twitter.
I put it on IG, so I didn't put it on my Twitter yet.
All right, so it's on IG, y'all. Look at Mark's IG for that conference. It's free to register, and Mark will be talking about all kinds of stuff like money and investing. It's called Moneyball, Investment and Financial Literacy Playbook. Is it Taryn?
Yeah, shout outs to Taryn. I guess apparently she went to Howard University.
Oh, dope. And yours truly, Mark Monroe. And you guys, you can find that link to register on Mark's page. It is this Saturday, and it looks like I don't know if there's like a limited amount of tickets, so you want to get it as soon as
just know that the event is free. So
yeah.
And I like
so
free.
It's 10 a.m. It's 10 a.m. to 12 p.m. So it's 2 hours online. Tickets are still available right now, but as we're speaking, people might just be swooping them up. So yeah, you might want to hop on that. Go to Mark's page for that link info.
Dope.
Okay, I think that's it. It's a wrap.
Right.
So,
all right. Well, got any last words? You want to do it today? Or?
No, I don't. There's just one thing I want to say, so I'm gonna save it. I'll say it. No, I gotta say it at the end.
Oh, okay. Well, thank you, each and every single person for that is being awesome. We appreciate you and your existence. Stay focused and keep researching and execute. Those are the things in which that lead you to legendary status. Oh, yeah. And another thing that leads you to legendary status, which I think that we may be talking about that next Tuesday. You never know. But I think that there may be this thing where we talk about how fundamentals also have an impact in the economics. Yeah, we're having a part 3, y'all, and it's going to be lit. So Stay tuned.
Okay, so, all right, wait, you didn't sign off.
Oh, until next time, I'm Mark Monroe.
And I'm Jolene GC, in the place to be. But y'all, I have to sing my song. The chips, the Fed, that Dip Tho. Hey, we were singing that earlier. That's why I was laughing this morning. Before we went live, like I kept doing it and I was doing different versions of it. So
I think that's next thing you know, we'll be auto-tuned and somebody will create a song.
I hope not off that. That wasn't even my best one.
You want to give him your best one?
No.
Okay. All right. So until next time, we'll see you guys next week. Have a fantastic weekend. If you guys are part of the event, I will see you there on Saturday. But if not, be awesome. You stay classy, y'all. Until next time, peace.
Wait, before you go.
What happened this time?
We're at 49,754 subscribers. So almost to 50K. Almost there.
Oh, oh my gosh, there's like such I've been holding this in for so long and I just,
No, Mark, don't spill it. Anyway, bye y'all.
Hate being a keeper of secrets, but until next time, we'll see y'all in the next one.